Welcome back, friends. So, the path of inflation has been very, very tricky, and the decisions of the US Federal Reserve have been very cautious. Even the commentary that has been coming out of the various Fed members of late seem to indicate that they will not be in a very big hurry to bring the interest rates down. And the commentary tends to impact the stock markets from time to time. Looking at this week, we have various important data points, prominent amongst them being the Personal Consumption Expenditure Index, which is due to be released on Thursday. We also have the US consumer confidence and the durable goods numbers, which would indicate the state of the US economy. So they will be very, very closely watched, and you should understand that particularly the PCE data, is one which is very, very closely watched by the US Federal Reserve. If the inflation is still continues to be on the higher side, then definitely the Federal Reserve will find one more data in its arsenal to justify maintaining interest rates at the levels at which they are. If interest rates, however, if the inflation data on Thursday does show some sobering, then the Federal Reserve does get some ammunition in its arsenal to be able to tackle inflation uh, in a meaningful manner. The Fed futures, which are linked to the policy making rate, indicates that at the beginning of January, 150 basis points is what was expected or what was factored into the Fed futures rate. As of now, the expectation is only 80 basis points. So in 2 months, you have seen the Fed futures come down quite substantially. Not only that, you have also seen the bond yields retracing 4.3 percentage and above on the 10-year bond. So all this is once again indicating signs of interest rates being resilient, not willing to come down in a hurry. That in effect reduces the present value of corporate earnings and therefore can impact stock valuations. Friends, all this data put together is creating a scenario which um, does not augur very well for the well being of stock market valuations, which have been going higher on the back of exemplary results from Nvidia. But that's not been sufficient to be able to add to the breadth of the stock market rally in the United States. So, friends, we are looking at a scenario where the short term looks to be still under control as more data points are gathered by the Federal Reserve before its next rate decision meeting. However, at the same time, you find that the data points, although they are being gathered, but if they are more and more conclusive of Federal Reserve retaining its monetary policy as before, then this can go and unnerve the markets, and I believe that they will unnerve the markets very soon. To get to know more, what is the point of time where uh, this phenomenon will come and rattle investors and the stock markets, not only in the United States but across the world, please do join our Prime or Prime Plus Telegram groups. We'll give you the exact point, scientifically calculated, which can tell you where we are headed from here. To be a part of our Prime or Prime Plus groups, please WhatsApp us on 982-086-1044. Alternatively, you may email us at globalmoneyinvestor@gmail.com. GLOBALMONEYINVESTOR at gmail.com. Happy investing. Take care. Bye bye.